Welcome to Earnings Recap. Today we're covering Celsius Holdings' first quarter 2025 earnings report and call.
And it's a big one.
Definitely. And get this, Celsius just added a second billion-dollar brand to its lineup. Alani Nu joined the family on April 1st.
Wow. Yeah, that's huge news right off the bat.
So in plain English, we're going to break down Celsius's latest earnings, explain why the numbers matter, and give you a sense of what this all could mean down the road.
Sounds good. It's a really fascinating snapshot we have here because, on the surface, you see a revenue dip might cause some concern.
Right.
But digging into the details, you see a company making some pretty significant strategic moves, things that could have a substantial long-term impact.
Exactly. Let's jump right into that overall performance then. Revenue saw a 7% decrease year over year, landing at $329.3 million.
Yeah.
Now, a drop like that, it usually raises eyebrows. What's the story behind this?
Well, it wasn't simply, a lack of demand. Celsius pointed to a few key things. They saw a slower pace of their products moving off retail shelves in Q1, what they call slowed velocity.
Okay, slowed velocity.
And also the way they structured their incentive program for U.S. distributors this year, that timing was different.
Okay.
Plus, their big retail promotions, they happened later in the quarter compared to last year.
That's it.
So all that affected how the revenue was recognized in Q1.
So it sounds like maybe a strategic shift in how they're pushing products out, maybe timing, rather than like a fundamental drop in people wanting Celsius.
That seems to be a key interpretation, yeah.
Yeah.
And it's kind of backed up by the fact that they were also comparing against a really high bar.
Right, Q1 last year.
Exactly.
Right.
Q1 2024 was exceptionally strong. They had the nationwide launch of Celsius Essentials, loads of promotional activity. So comparing to that peak makes this year's dip look, well, more significant than it might otherwise be.
Right, they were lapping a blockbuster quarter, as they say. Here's a twist, though. The retail scanner data that actually showed a 2% increase in dollar sales for the 13 weeks ending March 30th.
Yeah?
That's a pretty big difference from the reported revenue, down 7%. What's your take on this divergence?
This discrepancy is really interesting, and it probably reflects those timing issues we just talked about.
Okay.
The scanner data going up suggests that those later in the quarter promos were driving consumer purchases at the checkout.
So people were buying it.
Seems like it. It could also mean that inventory movements in channels outside their main DSD network, think like big box stores versus direct deliveries to smaller shops, are influencing when Celsius records the sale versus when it shows up in the retail data.
Okay.
And those distributor incentives could play into the timing difference too. It might suggest, a focus on driving consumer demand first, which they expect will translate to revenue later.
Okay, so consumers were buying more, even if it hasn't fully hit Celsius's books yet for Q1. Let's pivot to profitability. How did things look on that front?
Well, gross profit did decline, came in at $172.4 million. But here's a really significant positive.
Yeah.
Their gross profit margin actually expanded by a healthy 110 basis points. It reached 52.3%.
Wow, that's over a full percentage point improvement in margin. That's strong. What drove that?
They credited that to getting better deals on raw materials and packaging sourcing efficiencies, they called it.
Makes sense.
And they sounded pretty confident about keeping a strong gross profit margin in the short term, like for Q2.
Okay.
But they did mention longer term things like potential inflation, tariffs that could create some uncertainty down the line. So enjoying it now, but aware of headwinds.
Right, always something. What about their other key profitability metric, adjusted EBITDA?
Adjusted EBITDA was $69.7 million. The margin there was 21.2%, which is lower than last year.
Okay, why the drop there?
They explained that's mainly because they're continuing to invest, spending money to grow the business globally. Sales, marketing, building out their organizational structure.
All right.
And notably, this also includes the costs related to the Alani Nu deal, the transaction expenses.
Okay. So spending money to make money, essentially, especially with that big acquisition.
Pretty much. They're investing now to fuel that future growth.
And net income, how did that shake out?
Net income attributable to common shareholders, that was $34.4 million, or 0.15 cents per diluted share, also down from the prior year.
Okay.
Which, aligns with the lower revenue reported for the quarter and those increased investments we've been discussing. You kind of have to see it in the context of their strategy.
Right. Okay, so a bit of a mixed bag financially for Q1. Revenue down for specific timing reasons, but strong underlying retail demand. Expanding gross margins, which is great, but higher investment hitting EBITDA and net income.
That sums it up well.
Now, let's dig into the real drivers here, starting with the elephant in the room, Alani Nu.
Absolutely. Big news. The acquisition officially closed April 1st, creating an immediate powerhouse.
And it's not just like a small add-on.
Not at all. It's already a billion-dollar brand in its own right. What's really impressive is its growth, 88% year-over-year increase in retail sales.
88%. Wow.
Yeah. And its market share is up to 5.3%. In fact, just this past April, Alani Nu's trailing 52-week retail sales actually went over $1 billion.
Incredible momentum.
Totally. Momentum that Celsius is now tapping into. That immediate market share jump is big, but the real insight will be seeing how they cross-promote, leverage distribution, and use each brand's strengths with different consumer groups.
So how does this combined force reshape their overall spot in the, very competitive energy drink market?
Well, on its own, Celsius held steady.
Yeah.
Solid 10.9% dollar share in the U.S. and tracked channels.
Okay.
But you add in Alani Nu's 5.3%, and the combined Celsius Holdings portfolio now commands a 16.2% dollar share.
16.2. That's significant.
It is. That's an 81 basis point increase year over year for the whole portfolio. And what's really telling is that together, Celsius and Alani Nu accounted for roughly 20%, 1/5 of the entire energy drink category's dollar growth in Q1.
Wow. So they're not just taking share, they're actually driving a big chunk of the whole category's growth.
Exactly. They're becoming a major force.
What else is contributing to their strategy? It seems like innovation is still a key focus for them.
Definitely. They launched new flavors in their Celsius Vibe and Essentials lines.
Yeah.
So they're keeping the core stuff fresh.
Good.
Their multi-packs are also really gaining traction, representing a pretty big chunk of retail sales, which suggests people are buying in larger amounts, stocking up.
Makes sense. Loyalty.
And then they made a strategic move into a whole new category with Celsius Hydration. It's a zero sugar, zero caffeine electrolyte powder.
Ah, hydration.
Yeah.
Big market.
Huge. A $1.4 billion category they're stepping into. This signals, a clear ambition to grab a wider range of beverage moments and consumer needs. Innovation isn't slowing down.
Expanding the product line, reaching more consumers in different ways. Distribution is also key. Where are they making headway there?
Big expansions. They moved into over 1,800 Home Depot locations. That gets them in front of a whole new crowd.
Yeah, interesting channel.
And maybe even more notably, they've started rolling out nationwide in 18,000 Subway locations.
18,000 Subways. That's massive for food service.
It really is. That food service channel, through their PepsiCo partnership, now accounts for 13.4% of their North America sales. So diversifying those channels is definitely key for long-term growth, reaching people where they are.
So more places for consumers to grab a Celsius or an Alani Nu. How are they building brand awareness and driving demand through marketing?
They've ramped up their marketing spend, both behind the core Celsius brand and that Leaf Fit identity. They've got big story-driven campaigns planned for the summer. Sounds like they're aiming for a deeper consumer connection.
Okay.
In Q1, they highlighted specific things like their NIL March Madness campaign, tapping into college sports fans.
Right, smart.
And partnerships with big names like Jaden Daniels, Juan Soto, trying to build that brand credibility and reach new groups. They really seem focused on building a lifestyle around the brand.
Yeah, sounds like they're aiming to be more than just a drink in a can. Let's look globally. How's that international expansion going?
International growth is proving to be a real engine for them. Really strong. 41% revenue increase over there.
41%? That's huge.
It is. And it's coming from both their established markets, like in EMEA, and also encouraging growth in newer markets. Think UK, Ireland, France, Australia, New Zealand.
Okay, so broad-based international growth.
Yeah. And even if you take out the markets they just launched in 2024, the rest of international still grew by 9%. So there's organic growth happening in those newer places too.
That's promising.
Their approach seems kind of measured, but definitely optimistic about the potential. It'll be interesting to watch, what challenges they might face in these newer markets compared to the U.S.
Definitely something to keep an eye on. What about pricing? How are they handling that in this competitive landscape? Are they raising prices?
They indicated they're being pretty cautious about more price increases right now. They acknowledge consumers are, price sensitive. People might shift to multi-packs or hunt for deals.
Makes sense.
They did mention they took some price back in Q4 of last year, so those increases are already kind of baked in.
Okay.
So it suggests they're trying to balance, using their brand strength, but also being mindful of shopper behavior and what competitors are doing.
Gotcha. And shelf space. It sounds like they expect to gain even more room in stores.
Yeah, their expectation is for continued incremental gains in shelf space, supported by new products coming out and also those secondary placements like coolers at the checkout. Those really help visibility and impulse buys.
Right.
They did add a note of caution, though. They said they're comparing against last year, which was apparently their best shelf reset cycle ever. So the gains this year might be more gradual, not quite as dramatic.
Okay, good context. Are there any sort of broader consumer trends that are really playing into their favor right now?
Absolutely. A huge one is the consumer shift towards sugar-free energy drinks.
Oh, that seems everywhere.
It really is. In 2024, sugar-free actually overtake full sugar varieties. And in Q1 this year, sugar-free drove something like 86% of the whole category's growth.
Wow, 86%.
Yeah. And given that both Celsius and Alani Nu are entirely sugar-free, they're perfectly positioned for where consumers are heading.
Perfectly aligned.
Exactly. And another thing, Celsius already had a more gender-balanced consumer base compared to some traditional energy drinks.
Right.
And adding Alani Nu, which is particularly popular with women, just strengthens their appeal to that really significant and maybe underserved part of the market. So yeah, they're positioned very strongly with current trends.
It really sounds like they're riding some powerful consumer waves. Any key operational moves to help support all this growth?
Yes, actually. The appointment of Eric Hansen as their first president and COO, that's a significant move.
Okay, what does that signal?
It signals a clear focus on improving operational efficiency, getting better at scaling the business, especially important with that big PepsiCo partnership growing.
Makes sense. Need the operational chops.
Exactly. And they also mentioned their fully integrated big beverages manufacturing facility. That gives them more flexibility in production, which is crucial when demand is high and you're launching new stuff all the time.
So focusing on driving sales and making sure the trains run on time, basically.
You got it. Optimizing operations.
So what's their overall outlook then for the rest of the year, looking ahead?
Their priorities seem pretty clear. Keep improving how quickly products sell that velocity piece, reach more households penetration, grow their share across different times people might want a functional drink, and keep those operations efficient.
That's a good plan.
They expressed confidence in their ability to keep growing and creating value.
Yeah.
And importantly, they announced they're doing a public call later this quarter, specifically to talk about Alani Nu.
Oh.
Yeah, to discuss the financial models, the implications of the acquisition. That shows, a commitment to transparency, giving more detailed insights into the combined company's future.
Okay, good to know. So despite that headline revenue dip, which seems to have clear explanations, it really sounds like Celsius is on a strong growth path, making big strategic moves with Alani Nu, expanding globally, innovating. They seem to be playing the long game for market leadership here.
Precisely. Q1 had some unique factors hitting the top line, but the underlying strength you see in retail sales, the huge international expansion, and that just transformative acquisition of Alani Nu, it paints a really compelling picture. This looks like a company strategically positioning itself for some substantial growth in this evolving beverage world.
So, for you, the listener, as this energy drink and functional beverage market keeps changing so fast, and now you've got this combined power of Celsius and Alani Nu, how might this portfolio reshape your choices in the beverage aisle? What new moments in your day, might these brands become a part of? Definitely gives you something to think about next time you're looking for that booster refreshment.